Hello students, welcome. This is Mrs. Mercado speaking. Welcome back. This week we are going to be covering chapter 13, which deals with the statement of cash flows. We had lightly touched upon the statement of cash flows before, but we had not done a full-blown statement of cash flows, which we are going to be doing in this particular chapter. So we have one full chapter of dealing with just one financial statement, which is the statement of cash flows. Now, there is a lot of information included in this chapter that I cannot cover in this lecture because I am limited on time. Please make sure that you do read the entire chapter so you can understand the different components of the statement of cash flows so it can simplify things for you when you're actually working out the problems. Now, in your final exam, you will have to complete a statement of cash flows using the indirect method. This particular chapter covers two methods, and we'll go over that in a little bit, but it covers two methods of preparing a statement of cash flows. I am going to be testing students on being able to complete the statement of cash flows using the indirect method. Now, for this chapter, students only have 4 homework problems to do. 2 of them are very easy, 2 of them are more complicated. I am going to go over the more complicated problems, which are completing full-blown statement of cash flows, okay? So make sure that you do read, like I said before, read before you attempt your homework assignments, okay? We are in week number, let me check this out. I forget what week we are already. Oh, it's over here. Okay, found it. Okay, so we are in week number 15. This week runs from April the 27th through May the 3rd, okay? So after this week, we only have 1 more week of instruction time, and then we have our final exam, okay? So I really want to encourage all of you to stay focused, make sure that you complete all of your assignments, and if you have any questions, you let me know, okay? Before we get to finals week. Once finals week gets here, I will not be answering any questions related to any of the content in your final exam. So if you do have questions about the material that's going to be covered in your final exam, which includes chapters 8, 9, 13, and 14, you let me know before finals week, okay? So having said that, let's go ahead and let's jump in. I usually jump into the actual problems. This week I decided to provide you with a short overview. This chapter, like I said, has a lot of information, okay? Now, all of this information is coming directly from your textbook, okay? So you can read this. I just wanted to go over it with you because it is important we understand what we're doing, okay? So, the statement of cash flows is used by management in a way of evaluating either past operations or to help plan future investing and financing activities, okay? So, it is a very useful report that is used by management, okay? It is also used by external users, like people that are going to invest in your company, or creditors, if they're going to grant you any in loans or anything of that nature, to be able to identify the profit potential and ability to pay the debts by that specific company, okay? So, it is very important to understand the statement of cash flows is broken down into 3 sections, okay? The 3 sections that encompass the statement of cash flows are cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. We need to be able to differentiate between the 3 different types of activities within the statement of cash flows, okay? Now, the more complicated activity to analyze or interpret is the cash flows from operating activities. This is the one that has the majority of the activity when we prepare our statement of cash flows, okay? So these are any cash flows from transactions that affect the net income of the company, okay? And we'll analyze this in detail a little bit more further in a little bit, okay? The cash flows from investing activities are cash flows from transactions that affect investments and non-current assets of the company. And then last but not least, we have cash flows from financing activities. And these are cash flows from transactions that affect the debt and equity of the company, okay? So, the cash flows are reported on the statement of cash flows as follows, okay? We always start off with operating activities, then we go to investing activities, then we go to financing activities, okay? We have the detail of all those 3 sections. Then we figure out the change in cash, based on those three sections, did our cash go up or did it go down? Okay. Then we look at how much cash did we start off with, our beginning cash, and then we figure out the cash that we ended up with. Okay. And everything needs to balance, and we'll see one in a minute. Okay. So the ending cash on the statement of cash flows, the cash at the end of the period, is going to equal to the cash reported on the company's balance sheet at the end of the year. Now, it's very important to understand when we're looking at our balance sheet, we're going to be looking at cash. Cash is the most important asset that we have. You know, it's very liquid. So when we look at cash, let's say we look at cash at the end of last year. Okay. At the end of last year, we had cash of $100,000. Okay. At the end of this year, we have cash of $200,000. Okay. So our balance sheet is telling me that cash increased by $100,000. We went from $100,000 to $200,000. Okay. But that's all of the information that we get. Okay. Now, why did my cash increase from $100,000 to $200,000? Well, I don't know. Well, the statement of cash flows is going to give you that information. What caused this change in cash? It's going to give you all of the detail that is needed so you can be able to look and make a decision. Okay, well, what is the company doing? Okay, are they selling stock? Did they get a loan? And then now they have more cash? Did they sell a piece of equipment? What happened? Okay, so that is why it's so important. Okay, now I love Exhibit 1 and Exhibit 5. I use them all the time when I'm preparing my statement of cash flows. What I would do is, if I were a student, and usually what I do when I'm teaching face-to-face is I print these out for my students, okay? If you have access to a printer, please print them out and have them right next to you when you're solving the problems, because it's going to really, really help you out, okay? Now, I'm going to be toggling or going back and forth to these two exhibits because we need them a lot, okay? We need to refer to them a lot, okay? That's why I included them here. Okay, so the first exhibit that we have are the sources and uses of cash. Like I said, there's three kinds of activities that are reported in our statement of cash flows. The first one is operating activities, okay? So, cash increases. If you see here, we have a plus sign. This is plus, this is minus, okay? So your cash increases for operating activities from the sale of products or by providing a service. Your cash decreases either by purchasing inventory, by paying your employees, by paying taxes. So this side is your inflows. Money is coming in. This is money leaving. These are your outflows. Okay? Now, for investing activities, you make money by selling your property, plant, or equipment, or by selling investments. Okay? You pay out cash when you buy property, plant, and equipment, or you purchase investments. Okay? Now, for your financing activities, you receive cash when you issue long-term liabilities or you issue stock. Okay? For your financing activities, your cash decreases when you pay dividends to shareholders, when you repurchase common stock or treasury stock, or when you repay long-term liabilities. Okay? We're going to be using this when we work through the problem, and I'll be referring to this back and forth. Okay? Now, like I stated before, to me, the more complicated aspect of preparing the statement of cash flows is the operating section. There's a lot of adjustments that need to be done in the operating section. Okay. So this is what the operating section using the indirect method, which is what we're covering, or what I'm aiming to cover in your test, is going to be covering. Okay. So you always start off with your net income or your loss. That's your starting point all the time. Okay. Then you have several adjustments that need to happen to be able to reconcile net income to the net cash flow from operating activities. Okay, so we have three steps that happen or occur. Okay, so now maybe I should. Okay, so there's three things that need to happen. Now, when we are looking at the indirect method basically reports cash flows from operating activities by beginning with the net income and adjusting it for either revenues or expenses that do not involve the receipt of cash. Okay, depreciation, for example. Depreciation, yes, we have a piece of equipment and it lost value. Okay, but because it lost value, there was really no exchange of cash in the process. Because there was no exchange of cash, we need to make an adjustment for depreciation. Okay, so the depreciation amount that is reflected on your financial statements needs to be added in this particular section. So your depreciation of your fixed assets is going to be added. Okay. The same thing if you had an amortization of intangible assets, you would add it. Okay. Now, step number 2. You have items, you dispose of some of your assets. Maybe you sell a piece of equipment, maybe you sell your land, whatever the case may be. If you have a loss on the disposal of your assets, you add. If you have a gain on the disposal of your assets, you subtract. Okay? Now, we have step 3. These are changes in current operating assets and liabilities. Okay? So, here we have, if we have an increase in non-cash current operating assets or a decrease in current operating assets, this is what we do. Okay? So, if you have an increase in non-cash operating assets or a decrease in current operating assets, you subtract. Okay? If you have a decrease in non-cash current operating assets or an increase in current operating assets, you add. Okay? And you might say, well, what is the teacher talking about here? I'm confused. I get confused too, guys. That's why they broke it down for you down here. What you're going to do is you're going to look at your balance sheet. Okay? And you're going to look at an account, let's say, for example, accounts receivable. Okay? You're going to look at your accounts receivable at your ending balance last year, at your ending balance this year. Did your accounts receivable increase or decrease? Okay? So, if your accounts receivable increased, you're going to subtract. If your accounts receivable decreased, you're going to add. Okay? You're going to do the same thing for the rest. You're going to look at your inventory. Did your inventory go up or down? If your inventory increased, you subtract. If your inventory decreased, you add. Okay? Prepaid expenses. This is your prepaid insurance, your prepaid rent, anything of that nature. If it's a prepaid, if your prepaid increased, you subtract. If your prepaid decreased, you add. Okay? And so on and so forth. Okay? So these are all of the items that need to be analyzed. And depending whether they increase or decrease, it's whether you either subtract or add. Okay? And we'll look at this or apply this particular exhibit into actual context in a little bit. Okay? So, I'm going to start off with exercise 1317. Okay? This is very important because you're going to have a problem similar to this on your final exam. Once again, you are going to have a problem similar to exercise 1317 on your final exam. So make sure you pay close attention. I am going to go over 2 problems that deal how to prepare a statement of cash flows. This being the first one, and this being on your test. Okay? So, let's get started. Here it says that the comparative balance sheet for Alton Jones Industries for December 31st, 2022 and 2021 is as follows. Okay, so they've given you the information, they've given you the assets and the liabilities and stockholders' equity. Last year, this year. Okay, so this is last year's information, this year information. Okay, I'm not going to read through all of it. I'm just letting you know what it is. We'll use the information in a bit. Okay, now it says the following additional information is taken from the records. Okay, land was sold for $120. Equipment was acquired for cash. There was no disposals of equipment during the year. The common stock was issued for cash. There was a $62 credit to retained earnings for net income. There was a $24 debit to retained earnings for cash dividends declared. They are asking us to prepare a statement of cash flows using the indirect method of presenting cash flows from operating activities. And then they're asking us to analyze whether Alton Jones' net cash flows from operations was either more or less than net income, and then explain the difference between the two. Okay? So, I downloaded the template provided in the chapter so we can work out the problem. Okay? So, we always start on the top with the name of the company. This is Alton Jones Industries. And this is the statement of cash flows for the year ended December 31st, 2022. Okay? So, we're going to start off with our cash flows from operating activities. This is the first section that is that has to happen. Remember, they have to happen in sequential order. So first we start off with our cash flows from operating activities. We always start off with net income, okay? So, where did I leave my, oh, right here. I have so much paper in my desk. I need to get me organized. Okay, there you go. Okay, so we're going to start off with net income, okay? So, we're going to look at the information provided. And we're going to identify where did they provide us with the net income information, okay? Now, here, they don't give you any. They give you cash, accounts receivable, inventory, land, equipment, assets. They don't give you anything dealing with net income here. So let's go into the additional information section, okay? Now, I'm going to read over all of this, and let me try to figure out which one deals with net income, okay? So, here, let's look at letter E, okay? It says here, letter E, okay? No. So it says there was a $62 credit to retain earnings for net income. Okay. So what does that mean? That means that you have a $62 net income reported. Okay. So they just word it differently. Okay. They're letting you know that they've calculated your net income. They've given a credit to retain earnings for net income of $62. So your net income for this particular period is $62, and that is coming from letter E. I'm going to put letter E right here, right next to it. That way you know that I got this information from letter E. Okay. Now, we have several adjustments that need to happen to reconcile net income to net cash flow from operating activities. Now, if we look over here at your Exhibit 5, step number 1 is we need to adjust for depreciation of fixed assets. So the depreciation in step number 1 of fixed assets, we need to add the depreciation, okay? So, let's look. Do we have depreciation? Okay? So, let's look here, okay? In this particular area, they didn't mention anything about depreciation, but up here we do have accumulated depreciation. Now, this is where we need to be very familiar with our financial statements. What happens when we depreciate an asset? We debit depreciation expense and we credit accumulated depreciation, okay? So, the amount of depreciation can be figured out or calculated from your accumulated depreciation section, okay? So, let's look at this particular section, okay? Accumulated depreciation. Let's look at here. Okay? So, my accumulated depreciation last year was $42. That is how much my equipment had depreciated. My depreciation this year is $68. So, how much did we depreciate our equipment over the course of 1 year? Well, this year it's $68. Last year it was $42. So that means that during 1 year, my equipment got depreciated $26. Okay, that is how much the depreciation amount from year over year was. Okay, so my depreciation is $26. Okay, so according to our diagram, depreciation gets added. Okay, so I'm going to add the $26 depreciation. Okay. And right here, next to depreciation, I'm going to go ahead and I'm going to do the $68 minus the $42 gave me the $26. And this is coming from the accumulated depreciation, okay? Now, let's look at what else we need to do. Step number 2. Do you have any either losses or gains on the disposal of assets? Did we get rid of any assets? Okay. Well, let's look at letter A. It says here land was sold for $120. Okay. Now, am I going to put the $120? No. Okay. That was not my gain or loss. They're asking you to only enter the gain or the loss on the disposal of the asset. we need to figure out what our gain or loss was, okay? So, we are looking at land. We know that we sold land for $120. So let's look at our land account up here, okay? Let's look at land over here. Okay, land. We had it in our books last year for $330. This year we have it for $250. Okay, so let's see. So we had it in our books for $330. Now our books reflect $250. So that means that the land in our books was worth $80. Okay? So the land in my books was worth $80. And how did I figure that out? Well, last year I had land valued at $330. I sold a piece of land, and now my book value, or the value of my land in my books, is $250. So that means that the land that I sold was valued at $80. Okay? Now, how much did you sell your land for? You sold your land for $120. Okay? So, you sold your land for $120. It was valued at $80. Okay, so it's going to be, sorry about that. So, we sold it for $120. I'm going to subtract. I'm having problems with my keyboard. I think I need to get me a new keyboard. Okay, so $120. And then I'm going to subtract, there we go, the amount that it decreased in value in my books. So it went from $330 to $250. That was $80. So that means that I made a gain of $40. Okay, so let's run through this again. How do we get $40? Well, in my books, my land was valued at $330. And then I sold a piece of land. And now the value of my land is $250. So we need to figure out that piece of land that you sold, how much was it valued at in your books? Well, I had it at $330. Now my land is valued at $250. So that means that the piece of land I sold was valued at $80. Well, how much did you sell that $80 piece of land for? Well, I sold that $80 piece of land for $120. So $120, which is what you sold it for, minus what it was valued at, that means you had a gain of $40. Okay? A gain of $40. Okay? So, what do we have? We have a gain on the sale of land. Okay? Now, let's go back over here. If you have a gain when you sell a piece of an asset, okay, if you have a gain, you have to record it as a minus sign. Okay? You see it has parentheses. So your gains are deducted from your adjustments. Okay? So it's a negative adjustment. Okay? So that is how I figure out that this needs to be negative 40. Okay? So I had a gain of $40. I'm going to deduct that $40 from my operating section. Okay? Now we go to step number 3. This is where we're going to do our changes in current operating assets and liabilities. Okay? And this is where we have to analyze all of these accounts down here. Okay? So, cash, we don't use it at this point in time. Cash is our starting and ending cash that's used at the end of our statement of cash flows. Okay? But now let's look at our accounts receivable. Okay? Did my accounts receivable go up or down? Okay? So let me mark my accounts receivable. And I like to mark them, guys, because I want to make sure that I use the information provided. That way I know what has been used, what has not been used. Okay? So let's analyze accounts receivable. Okay? So, accounts receivable. Okay, let me get my calculator. I started out with $49 in accounts receivable. Now I have $55. Okay? So, my accounts receivable increased by $6. It went up from 49 to 55. So it increased by $6. Okay? So, accounts receivable increased by $6. Okay, now let's look over here. If your accounts receivable increases, then you subtract. Okay? An increase in accounts receivable gets subtracted. Okay? So here we're going to do, I'm sorry, I'm in the wrong section. Increase in accounts receivable, and we are going to subtract $6. Okay? And how do we get that? We got the 68 minus the 42. We identified that our accounts receivable had increased by 6. If we look over here, if accounts receivable increases, we subtract. Okay? Now let's look at our inventories. Okay. What happened to my inventories? Okay. Well, my inventories were $99, and now I have $117. Okay, so 117 minus 99. That tells me that my inventories increased by 18. How do I know that they increased? Well, we went from 99 to 117, so that's an increase of $18. Now let's go back and let's look at our table over here. If your inventories increased, we're going to subtract. Okay? So increase in inventory gets subtracted. Okay? So here I'm going to put increase in inventories because they did increase from 99 to 117. And because it's an increase, I am going to subtract the $18. Okay? Equipment is an asset. That does not go in this section. Now let's look at our liabilities and stockholders' equity. Remember down here, we have increases in non-cash current operating assets or in operating liabilities. So we're looking at our operating assets or our operating liabilities. So let's look at our liability section, and we're going to look at accounts payable. Okay? What happened to my accounts payable? This is the money that you owe your vendors. Okay? If you bought something on account, you owe them money. Okay? So, I had $37 that I owed. Now I owe $51. So let's figure this out. My accounts payable increased by $14. How do I know that it increased? Well, we had $37. Now we have $51. That's more. So that's an increase of $14. Now, this is accounts payable. We have an increase in accounts payable. Let's go back over here and let's look. If we have an increase in accounts payable right here, increases in accounts payable, we're going to add. Okay? So increases in accounts payable, we add. Okay? So now we're going to go over here and we have an increase in accounts payable and we're going to add $14. Okay? Now we're going to figure out our net cash flow from operating activities. Okay? So how are we going to do that? Well, I'm going to do it in a calculator the old-fashioned way. Okay? So I started off with net income of $62. Okay? Let me move my calculator a little bit here. Okay? And then I am going to add my depreciation, $26. I'm going to subtract my $40 on the gain made from the sale of the land. I'm going to subtract the $6 for my increase in accounts receivable. I'm going to decrease my $18 for my increase in inventory. And I'm going to add $14 for my increase in accounts payable. That gives me $38. So the net effect of all of these transactions is $38. And it's a positive number. Okay? So the net cash flow from operating activities is $38. Okay, we added and deducted some activities that did not affect cash, such as depreciation. We adjusted for any gains on sale of land and any other current operating assets and liabilities. Okay? Now we're going to move on to our investing activities. Okay? Investing activities is either you purchased property, plant, and equipment, or you sold property, plant, and equipment, or you made some investments. Okay? did we buy any property, plant, and equipment? Okay. So let's look here. Did we buy any property, plant, or equipment? Yes, we did. Okay. It says here, equipment was acquired for cash. Okay. Equipment was acquired for cash. Okay. So, do they give you a dollar amount? No. Now, let's look at our equipment account. Let's look at equipment. We can figure out what the amount is by analyzing our equipment account. Okay, so my equipment last year had $175 worth of equipment. Now my equipment account has $205. Okay, so my equipment account increased because we bought more equipment. So my new value is 205. My old value is 175. So my equipment increased by $30. Okay? So you purchased your equipment for $30. Okay? Equipment was acquired for cash, so you bought equipment for $30. Now what happens when you buy equipment? Okay? When you buy property, plant, or equipment, you subtract. Okay? You buy property, plant, and equipment, which we did. We bought equipment. We subtract. Okay. So I'm going to put this on the second one. Okay. Right now we have another item that we're going to put enter. Okay. So cash paid for the purchase of equipment. Okay. How much did we pay for this equipment? We paid $30, and it says here that if you bought equipment, you're going to enter it as a minus sign. Okay. So it's going to be minus 30. What else did you buy? Okay, it says here, investing from the sale of property, plant, or equipment, or you invested by buying property, plant, and equipment. What else did you buy? Well, you also bought land. Okay, so let's look here. You bought a piece of land for $120. Okay. $120. So they're telling you how much you purchased the land for. You purchased it for $120. Okay? So, did you pay out cash or did you receive cash? Okay? Land was sold. So you sold a piece of land. When you sell something, what do you receive? Do you receive money or what do you receive? So land was sold. Let's look over here. If you sell property, plant, or equipment, you add. You add because you received cash. You gave out a piece of land and in return they gave you money for it. Okay? So, here we said we cash received from the sale of land. Okay? If you sold land or a piece of equipment or property, plant, or equipment, you add. Okay? So I'm going to add the $120 that I purchased, or I'm sorry, that I sold the land for. Okay? Land was sold for $120. Okay? So now I can get my net cash flows from investing activities. What happened? Well, I received cash from the sale of land, $120. I also purchased a piece of equipment for $30. Okay? So how do we figure out our net cash flow from investing activities? Well, we get our $120, the cash we received from the land, minus the $30, the cash that we paid for the equipment. We have an increase of $90 for cash flows from investing activities. Okay. Now we have cash flows from financing activities. Let's look at our financing activity section. Okay. For financing, our cash increases by either issuing long-term liabilities or issuing stock. Our cash decreases by paying dividends to shareholders, by repurchasing stock, or by repaying long-term liabilities. Okay? So what else happened? Okay? It says letter C. There was no disposal of equipment during the year. Okay, so that would have fallen here. They're letting us know there was no disposal of equipment, so that's good. Okay? Now, common stock was issued for cash. Okay? Common stock was issued for cash. Okay? So, we issued some common stock. Did they tell you how much? No. Okay? We have to figure that out. Okay? Common stock was issued for cash. Okay? So, if you look at page 620, let me see if I have it open. Yeah, let me go into the section here on your ebook. When we're looking at stock. Okay, here we go. So, if you look at section 13.4 of your book, it talks about common stock. We are issuing common stock. Okay? When we issue common stock, you need to look at two accounts. You need to look at your common stock account and your paid in capital account. Okay? So, in this particular example, the common stock account increased by $8,000, and the paid in capital in excess of account increased by $40,000. Okay? So, when we enter that transaction into our statement of cash flows, the increase from the 4,000 shares of stock issued plus the paid in capital needs to be added together. So it's the 8,000 plus the 40,000 will give you the total that needs to be entered in your cash received from the sale of common stock. So when you're analyzing your stock, you need to look, or you need to add the common stock account plus your paid in capital account. Okay, that is what needs to happen. So let's look over at the problem again. Okay, let's look at what happened on those two accounts. So we are looking at these two accounts right here. Okay, so let's look at our common stock account first. Common stock, we start off with 80. Now we have 125. Okay, so what's my difference there? So, how much did your common stock account increase by? Well, we ended up with 125. We started off with 80. So that means that my common stock increased by $45. So jot that number down in a piece of paper, $45. That's $45 that my common stock account increased. Now let's look at our paid in capital, excess of issue price over par for our common stock. Okay? So, my beginning balance was 70, my ending balance was 85. So 85 minus 70, that means that my paid in capital account increased by 15. Let's jot that number down in a piece of paper. So, if we add the $45 increase from the common stock, so from 80 to 125, that was an increase of 45. We add the $15 increase from 70 to 85, that's $15. We can figure out that the amount of the common stock that was issued for cash was $60. Okay? So, cash received from the sale of stock was $60. And we got those $60 by calculating the difference, the increase year over year from these two accounts right here. So from 80 to 125, that was $45 increase. From 70 to 85, that was $15 increase. So 45 plus 15, that gives you the $60 right here. Okay? Now, what else happened? Okay? So we already figured out, or we already used this one. That one has been used. We also already used that one. They're telling us that there is no disposal of equipment, so we really don't have to do anything with that because we didn't get rid of any, we didn't dispose of any equipment. Now, it says here, there was a $24 debit to retain earnings for cash dividends declared. Okay? Cash dividends declared. Now, if you look at your ebook, okay, there's a section or this little diagram that talks about dividends declared. Okay, let me look at the ebook. I think it's the next section. Yeah, it's right here on section 13.4c. This little diagram right here is very important. Okay, and it explains the whole kaboom in your book. Okay, I'm not going to go over it. You can go over it, but I'm going to use this diagram to explain it. Okay, so when dividends are declared, you're going to get the dividends declared from your retained earnings, and you're going to add if you have any decreases in dividends payable, or you're going to subtract if you have any increases in dividends payable, and that's going to give you the actual cash paid out in dividends. So dividends declared plus or minus your dividends payable gives you the cash dividends paid. So let me go back to the problem. So, do we have any dividends payable? Yes, we do. You're not always going to have them, but in this case, you do have dividends payable. Okay? So, dividends payable. I had 0 to start off with last year, and now I have $5. Okay? So, my dividends payable increased by $5. Okay? Dividends payable increased by $5. Okay? So if we have an increase in dividends payable, we're going to subtract. Okay? We have an increase because we went from 0 to 5. So that's an increase. If you have an increase, you subtract. Okay? So let's look over here. So I declared $24 of dividends. Let me get my calculator. I declared $24 of dividends. I'm going to subtract the $5 from my dividends payable. So that means that the actual cash paid out in dividends is $19. Okay? Why would we have dividends payable there? Okay? Maybe you didn't have the account information of some of your stakeholders so you could deposit them their dividends. Something happened to where you could not pay out dividends for particular people. You couldn't locate their information. You couldn't locate them. The money came back from the bank that the account where they had set it up, where the dividends were going to be paid out, was closed. There's just multiple reasons. So because we can't pay out these dividends for whatever reason, we put them out on a dividends payable. This means that we did not pay out cash. Yes, we declared dividends of $24, but we could not pay out $5 worth of dividends for X reason. Therefore, we only paid out $19 in cash. Remember, this is the statement of cash flow, so we are only interested in actual cash coming in or leaving the company. And in this case, we paid out $19 of dividends. Okay? So cash paid for dividends, and that is a minus because we paid cash. Cash decreased. Okay? So we've used that. Letter F has been used. Okay. So now I can figure out my net cash flow from financing activities. Let me get my calculator out here. So it's $60 minus $19. That's $41. Okay. Positive. Okay. So we've already figured out my net cash flow from operating, my net cash flow from investing, and my net cash flow from financing. Okay? Now we're going to figure out our change in cash. Did your cash go up or did it go down? Well, how do we do that? You're going to add the total from your operating, your investing, and your financing. Okay? So, if it's positive, you add. If it's negative, you subtract. Okay? In this case, they're all positive, so I have $38 plus $90 plus $41. That gives me $169. Okay? So once again, how do I get the $169? You add the 38 plus the 90 plus the 41. Okay? Now, cash at the beginning of the year. We're going to look at our cash account. Okay? Cash account right here. How much cash did we have at the beginning of the year? Well, we had $14 to start off with, and we ended up with $183. So our cash went up significantly. So cash at the beginning of the year was $14. Okay, that's coming from right here. Okay, cash at the end of the period, $183. Okay. Now, don't just plug the numbers in. Make sure that they tie. Okay. This is what lets you know if you're in balance, if you accounted for everything that you should have accounted for. Okay. So my change in cash was $169 plus my cash at the beginning of the year year was $14. So now my ending cash should be $183, which is what I'm reporting on my balance sheet, which is correct. So your change in cash plus your beginning cash gives you your cash at the end of the year. Okay? And now you're in balance. Okay? If once you plug in your cash at the beginning of the year, if these two numbers do not give you your cash at the end of the year, you made a mistake somewhere and you need to figure it out. Okay? Down here, you have to balance to, once you plug in your change in cash from your three operating sections, you add your beginning cash. Your cash at the end of the year from your balance sheet needs to equal what you reported on your balance sheet right here. So that number needs to equal that number. Okay? If it does not equal, then you made a mistake somewhere and you need to fix it. Okay? So that is your statement of cash flows. And that is your completed statement of cash flows. Now, it says that's requirement A. Now, requirement B. Was Jones' net cash flow from operations more or less than net income? So let's look at our operating section. My net income was $62. My cash flows from operating activities was $38. So they're asking, was the net cash flows from operations more or less than net income? Well, 38 versus 62, it was less. Okay? So my first response here is Alton Jones' net income was more than the cash flows from operations, okay? Because, and then we need to explain why. Okay? Am I spelling because correct? Yes, because of. So what caused the difference between my $38 and my $62? Well, this is what caused the difference between my net income and my net cash flow from operating activities. Okay? So, we had to start off with a $26 of depreciation expense. Okay? Why isn't it looking down here? Depreciation expense, okay, which has no effect on cash. That is why we made that adjustment. Okay? We also had a gain of $40 on the sale of land. The proceeds from the sale of $120, okay, which included the gain, are reported in the investing activity section of the statement of cash flows. That is why we subtracted it from here. We can't double count things. Okay, we included the sale of the land, including the gain, in my investing activity section. So because I'm including it in this section, I'm going to deduct the gain from this top section. I'm not going to include it here. That's why I made a deduction of $40 here. Okay. We also had changes. We also had changes in current operating assets and liabilities that are added or deducted depending on their effect on the cash flows. So we had an increase in accounts receivable, and that's $6 that was deducted. We had an increase in inventories where $18 was deducted, and we had an increase in accounts payable where $14 were added. And that is what causes our difference between our net income and our operating section of our statement of cash flows. Okay? So it's just basically re-entering this information that we have here that explains the difference. Yes, we reported net income of $62, but the actual cash flows from operations is only $38. These transactions should not be included, because of various reasons. Either they're non-cash transactions. Some of these transactions are being accounted for in another section, or any changes in our operating assets and liabilities that don't affect cash. Okay, so that is your completed statement of cash flows and your analysis. You are going to have a problem like this on your test. Please go over this video, pause it, look at the information carefully. Where am I getting all of these numbers, my calculations, so you can be able to understand it very carefully, because like I said, you're going to see something like this on your test. Okay? Because the statement of cash flows can be a little bit confusing, I am going to go over another one just so we can gain a little bit more of hands-on practice. Okay? And that way you can become more comfortable using the little diagrams that are provided to be able to figure out what goes where, if it's included as a positive or as a negative. Okay? So, the next problem that I'm going to be working on is problem 13.2 of your homework. Okay? This is statement of cash flows, once again, using the indirect method. Okay? So, it says the comparative balance sheet of Yellow Dog Enterprises at December 31st, 2018 and 2017 is as follows. And then they give you your assets, your liabilities, and your stockholders' equity, and all of the corresponding amounts. Okay? Additional data obtained from the income statement and from examination of the accounts in the ledger are as follows. So net income is $190,000. Depreciation reported on the income statement is $115,000. Equipment was purchased at a cost of $395,000, and fully depreciated equipment costing $75,000 was discarded with no salvage value realized. The mortgage note payable was not due for 6 years, but the terms permitted earlier payment without penalty. 40,000 shares of common stock were issued at $15 for cash, and cash dividends declared and paid were $50,000. Okay? And they're asking us, using all of the information provided, to prepare a statement of cash flows using the indirect method. So now I'm going to go through this a little bit quicker because we've already gone through the other problem in specific detail. So I'm just going to go and run through this. That way you can follow along and see how it's done. Okay? So once again, we start off with our operating activities section. The first item we have is net income. Okay? In this particular problem, net income is provided to you. So there's really no calculations or no figuring out. Net income is just given to you in plain terms right there. So I'm just going to enter net income of $190,000. Remember, I'm marking them off because I want to make sure that I use all of my information provided. So net income, $190,000. Now, adjustments to reconcile net income to net cash flow from operating activities. The first thing we have is our depreciation. Okay, remember, we're going to look over here. Step 1, depreciation of fixed assets is added. Okay, so depreciation reported on the income statement is $115,000. Once again, they gave you the number, piece of cake. We're just going to plug that number into our report. So depreciation of $115,000, and that is added. Sorry. Like I mentioned, I need a new keyboard. $115,000. Okay. Now, the next section is, do we have any gains on or losses on disposal of assets? Did we get rid of any assets? Okay. So, Part C says that equipment was purchased. Okay, that's good. It also says that equipment costing $75,000 was discarded with no salvage realized. Okay, so we don't have any equipment that we sold that we made a profit or a loss in. We just had a piece of equipment that was in our books. It was useless. We had fully depreciated it. There was no salvage value, so we just got rid of it. So that has no impact on our statement of cash flows. Okay? So now we skip that section because that step 2 didn't apply to us in this particular problem. And now we go to step 3. We're going to look at our changes in current operating assets and liabilities, and this is where we either add or subtract. Okay? So let's look at our accounts receivable. Okay? Accounts receivable. So my accounts receivable went from 300,000 to 275. So it decreased. It went down from 300 to 275. So 275 minus 300, that means that my accounts receivable decreased by $25,000. So if your accounts receivable decreases, you add. Okay? So I have over here a decrease in accounts receivable, and if it's a decrease in accounts receivable, you add. Okay, so I'm going to add my $25,000, and remember the $25,000 is the 300. It went from 300 to 275, so that's a difference of $25,000. Okay. The next thing we have is inventories. Okay, let's look at our inventories. What happened to my inventories? Well, it went from 400 to 510. So my inventories increased. Okay, by how much? Well, 510 minus 400. My inventories increased by $110,000. Okay, $110,000. So if your inventories increases, you're going to subtract. Increases in inventory are subtracted. Okay? So, your inventory increase in inventory, and we're going to subtract that now. Now, be very careful because what students tend to get confused is they see an increase and they want to add. No. Here you have to put what happened. Well, my inventory increased. Well, what happens if your inventory increases? You subtract. So the number needs to be entered in a minus. Okay? Next thing we have are prepaid expenses. Okay? And let's look over here. We have accounts receivable, inventory, prepaid expenses is next. Okay? So let's look at our prepaid expenses. And it varies by company. Some companies might have prepaids, other might not. You only take it into account if the company has it or not. So, prepaid, we went from 10 to 15. So we have an increase of $5,000. So 15,000 minus 10, that means that we had an increase of $5,000. So prepaid expenses increased by $5,000. So if your prepaid expenses increases in prepaid expenses, you're going to subtract. Okay? So here we have an increase in prepaid expenses, and because we have an increase, we are going to subtract. Okay? According to the problem, increases in prepaid expenses are subtracted. Okay? Now we're going to look at our next section, which is our accounts payable. Okay? So let's look at the problem, and we have accounts payable. Okay? And this is just our short-term liabilities. Okay? Short-term liabilities, we have accounts payable. We went from 90 to 100,000. Okay? So that means that my accounts payable increased by $10,000. So if your accounts payable increases in accounts payable, you're going to add. Okay? Increases in accounts payable, you add. Okay? So here we have an increase in accounts payable, and I'm going to add 10,000. Okay? So those are all of the items that I have that are going to be used for that section. Okay? We have accounts payable, accrued expense payable, and income tax payable. We don't have the last two, so we're just going to skip those. Okay? Okay, so now I can get my net cash flow from operating activities. I'm going to add all of these numbers up. Okay? Let me get my calculator. So I have 190,000 plus 115,000 plus 25,000 minus 110,000 minus 5,000 plus 10,000. That gives me $225,000 increase. Okay. So my net cash flow from operating activities increased by $225,000. Okay. So in this particular case, your net cash flow from operating activities is larger than your net income. Okay. Specifically because your depreciation is huge, $115,000 of depreciation. That's a non-cash transaction right there. Okay. Okay, now we go to investing activities, and for investing activities, we are going to look over here. Investing, either you sell property, plant, or equipment, or you buy property, plant, or equipment. Okay, so what do we have? Well, we purchased a piece of equipment for $395,000. Okay, so that falls under that category. You bought equipment. Okay. Now, if you purchased equipment, you buy property, plant, or equipment, that's a minus. Why? Because how did you pay for that property, plant, or equipment? With cash. So your cash goes down. Okay? So, what happened here? Cash paid to purchase equipment. Okay? And because we purchased equipment, it's going to be negative because we paid with cash. Okay? So that's the only purchase that we had under the investing categories. I'm just going to bring that number down because we only had one transaction of $395. Okay? Now we're going to look at our cash flows from financing activities. Okay? From financing activities, either you issue long-term liabilities or issue stock, or you pay dividends to your shareholders, you repurchase stock, or you repay long-term liabilities. Okay. Now we need to know the difference between short-term liabilities, long-term liabilities. Short-term liabilities are anything that you owe and that you're going to pay within 1 year. Long-term liabilities is anything that's going to be paid in a period longer than a year. Okay. So let's go back and let's look at this information. Okay. So let's look at our positive item first. First, let's look at our common stock. Okay? Let's look at our positive amounts first. We issued stock. Okay? Issued stock. So, let's look at letter E. Okay? Right here. So, you issued 40,000 shares of stock at $15 each. Okay? So how many shares do you have? 40. 1, 2, 3. 40,000. And at $15 each, that means that you sold stock for $600,000. So what happens here is you give your stockholders a stock certificate. They give you cash. So you received $600,000 in cash because you issued stock. So here we're going to have cash received from the sale of common stock. How much did you receive? $600,000. Okay. Now, here they gave you the number of shares of stock and the price. If they wouldn't have given you that, you could still figure that out by looking at these two accounts right here. Remember we did the same thing for the last problem? Last time they did not give you this information, so we had to calculate it up here. So it's the difference between your common stock and your paid-in capital account. So I'm just going to run these just to confirm my $600,000 figure. Okay? So we went from $200,000 to $600,000. That's 600. A little bit delay here. Here we go. One more zero. Okay. 600,000 minus 200,000. That's an increase of 400,000. So jot that number down. 400,000 increase in my common stock account. And then we went from 300 to 100,000. So we had an increase of 200,000 in my paid-in capital. So from 200 to 600, that was an increase of 400,000. an increase from 1 to 300,000, that's an increase of 200,000. That gives me 600,000, which is what we have calculated, okay? So you can either get it from down here, you're multiplying your shares of stock times the price, or you can get it by getting the difference between these two accounts. Both of those methods give you the $600,000 figure, okay? So that is cash that was received. What else happened? Well, you paid out some dividends, okay? Awesome, okay? So we paid out some dividends. It's a good year. We paid out $50,000 in dividends, okay? So let's look over here. You paid out, pay dividends to shareholders. That's a minus. Why? Because money is leaving the company. You're paying for dividends, a dividend payout, okay? So remember, when we're dealing with dividends, we have to look at the dividends and declared and identify if we have anything on our account called dividends payable. If we do, we need to either add or subtract to get the actual cash dividends paid. So in this particular case, we don't have any dividends payable account. So we can disregard that. So our entry is going to be for the $50,000. So cash paid for dividends, because we are paying cash, this is going to be entered as a minus $50,000. Anytime cash leaves the company, it's a minus. Anytime cash is received, it's a positive. Okay? Last but not least, we have letter D. Okay? Letter D. So letter D says, the mortgage note payable was not due for 6 years, but the terms permitted earlier payment without penalty. So they're telling you here something about the mortgage note payable. Let's look at a mortgage note payable. Okay. So what happened with this mortgage note payable? So we had a mortgage of $400,000 in our books last year. This year it's zero. Okay. So what does that mean? That means one thing. That means that we paid off our mortgage. Okay? We had a balance of $400,000. Now our balance is zero. We paid it off. Now, if we look over here, it says to repay long-term liabilities. You're paying off a long-term liability. It's a minus. Okay? So, what are we paying? Cash paid to retire a mortgage note payable. We paid it off. And we paid off $400,000. Okay? So now I'm going to get my total net cash flow from financing activities. And that's going to be $600,000 positive. Okay? Minus $50,000. Minus $400,000. That's going to give me a positive $150,000. So now I have my total for operating, investing, and financing. My total's for 3, and you have the details of what caused those increases or decreases. Okay? Now, change in cash. Your change in cash, you add the 3 totals together. Okay? You add your $225,000 from your operating. Okay? And then you're gonna subtract $395 from your investing, and then you're gonna add $150,000 from your financing, and that's gonna give you, I think I put too much zeros. Let me see. 225 minus 395 plus 150. There we go. So we get negative $20,000. And be very careful when you do the math. You can easily enter 1 extra 0. Okay? So here is negative 20,000. You add the 3 numbers together. Okay? 225 minus 395 plus 150. If it's positive, you add. If it's minus or parentheses, you subtract. Now we're going to get the cash at the beginning of the year. Okay? Now we're looking at our cash account. We need to make sure that we reconcile to our cash. Okay? So, my cash at the beginning was $100,000. Now I'm going to get my negative 20,000. I'm going to add these two numbers together. Okay? That plus that is going to give me an $80,000 cash at the end of the year. So your change in cash, your cash decreased by $20,000 during the year. You started out with cash of $100,000. That means that your cash at the end of the year should be $80,000. And let's see if that $80,000 equals to that number, and it does. So you see, that number needs to tie to that number all the time. And you need to make sure that you get your change in cash plus the cash at the beginning of the year will give you your ending cash balance. Okay? If that number does not equal to this number reported on your balance sheet, you made a mistake somewhere in your statement of cash flows, and you need to go back and figure out what's causing you not to be in balance. You always need to balance, and that's what I love about accounting. You know, you get these numbers, and you always have some way of verifying, did I do it right? Well, if that number equals to that number, more than likely you did. It doesn't give you a 100% guarantee, but it at least gives you some relief to, you know what, I did balance to my balance sheet cash amount. Okay? So then I must have done my statement of cash flow correctly. Okay? So this is another completed statement of cash flows. In this particular one, they're only asking us to complete it. Remember, I've used every single thing. Make sure that you mark them off. That way you don't forget to use any of the information provided in the problem. So those are the two statement of cash flows that I am going to go over today. They're the more lengthy problems in your homework. And like I said, the first problem that we covered, exercise 1317, that is going to be on your test. So make sure that you understand it. Please do your homework problem, and if you have questions, don't hesitate to reach out to me. Remember, the homework for Chapter 13 is due on Sunday, May the 3rd at 11 p.m. at night. Make sure that you mark your calendars so that way you can complete it timely. Okay? So this is Chapter 13, the Statement of Cash Flows. We're almost done with the semester, guys. I want to wish you the best of luck in your assignments. If you have any questions, don't hesitate to reach out to me via Blackboard, email. If you are emailing me, just make sure you include your name and the class that you're in. That way I know what class you're referring to, and I'll be more than glad to assist you. Okay? Please stay safe, and until next time. Thank you.